Hi, everyone. Welcome to Analyze Your Trade, episode number 4 for September 19th, 2017. My name is David Kosmeter. I am the creator of Timing Research, and tonight we will be discussing your trade ideas. We had 80 people submit up to 5 stock symbols for us to talk about this week. And the most requested ones should be showing on your screen now while I'm talking. And I developed this show with Dean Jenkins of Follow Me Trade, and he is here to moderate tonight, so I'm going to go ahead and turn it over to him.
All right, thanks, David, and for tuning in. I look forward to this. This is a fun time. I love analyzing stock charts and seeing what kind of ideas you got, and being able to offer both my opinions on them and then hear from the other panelists. So we're going to spend as much time as possible just analyzing the picks that you're interested in, the ones that are here in the sharing, and you can type them in there on YouTube in the comments area. We'll try to take as many as we can on the fly, real time, and just get to as many as possible. So we're going to spend the bulk of this show analyzing charts and giving our opinion on trades. But we're going to do a quick introduction of our panel, and we got a small panel tonight, 3 of us. So it's going to be real focused, and you just get to get through more symbols, and we'll see how that goes. But when we kick it off, just a real brief 1 or 2 minute introduction, and we'll go ahead and start with you, Sam. Tell us who you are and what you got going on.
Sure. My name is Sam Borgia. I'm a markets editor for TradingGods.net. I do a lot of other writing on the financial markets, mostly focusing on fundamentals, the overall market picture, looking at where cryptocurrencies are going. That's a big area. To be honest with you, I've kind of taken a step back from stocks recently, given all the euphoria around the Trump rally. So I have been kind of monitoring it from abroad. So maybe I can provide some different perspectives on where I think the market is headed with respect to and every individual stock that we talk about today. You can learn more about TradingGods.net by visiting us at TradingGods.net. We are actively involved in volatility trading, so VIX. So we are actively monitoring the VIX as it relates to the broader stock market.
All right. Well, good to have you here, Sam. And John, why don't you go ahead and just give us a quick introduction and tell us who you are and what your focus is.
My name is John Netto. I'm a cross-asset class trader and author of The Global Macro Edge, Maximizing Return Punitive Risk. I also run the ProteanTrader.com. I'm a cross-asset class trader. Like I said, the majority of what I trade is futures and options on futures. And when I look at stocks, it's more from the perspective of what is the macro message, both the performance of stocks in the U.S. and the stocks abroad in Europe and in Asia, and what specific sectors are performing well, and what narrative that feeds into about the macro economy. So, I think every guest here tonight, every moderator, all of us here tonight have a different background, and I hope to share with you in the macro world. The FOMC meeting tomorrow is particularly important. So, most of the analysis I give on these stocks tonight will be in the context of tomorrow's FOMC meeting and what that means on the broader market. And of course, then you can determine what the underlying correlation of that stock is, and ultimately what either a more dovish or more hawkish Fed would mean for the market, or for your stock. There you go. Thank you.
Yeah, I think it's a really good lineup tonight, with John, with your perspective, global macro view, and how all the parts move together and connect, and Sam with a view on VIX. So I think we're going to get some really good opinions and information about the different stocks that we look at, not just whether it meets an individual trader's setup, but maybe some more depth. So this is going to be interesting. So let's jump right into it. The very first stock on the list that came out on top by a wide margin. So why don't we kick that off, and each of the panelists, let's take a look and see what you think, and we'll just do kind of a roundtable free for all. I won't go in order. It's just, if you got an opinion on Tesla, go ahead and speak out. Let's have a great discussion on it, and we'll move on to the next one. And if you got a screen or a chart you want to share, that'd be awesome too. So what do you guys think of Tesla?
I'll go first. First thing that jumps off of you is the fluidity and ebb and flow which it trades. That's not always a case with a lot of products that can be traded out there. So immediately it's a product that you do want to be involved with, because it responds to technicals very well. That being said, this 385. I mean, some of the stuff is pretty obvious, but just in the context of the 385 level is pretty obvious. And I would tie this in tomorrow with, if we get most of the market is expecting the Fed to lower a number of the dot plots. Tesla has a lot of profits built into it. It's just failed from this resistance level. I would argue that if the Fed comes out with a hawkish surprise tomorrow, and by hawkish surprise, I mean they don't lower their dot forecasts for 2017 and 2018. I think Tesla is one of the places that might find some vulnerability and a sell down to back to the 355 level. If, however, the Fed comes out and they are a little more dovish or their business as usual, I think Tesla can be back at the highs fairly shortly.
All right. You got some thoughts on Tesla, Sam?
Well, I just have a very basic chart here that I'm looking at from WSJ.com, just looking at the market. I mean, Tesla is a very exciting stock, of course, for a number of reasons. I think a lot of people look at it from the standpoint of potential. I think that the fundamentals around it right now are a bit all over the place. You look at things like, claimed gross margins and what they're intending to do with the Model 3. There's a bit of hesitation on my part to look at how it's going to perform in the short term. I just think, look, if you really do believe in the Tesla business model, if you think that Tesla's going to change the auto industry, which in a lot of ways it already has, it's something that you can buy and hold for a prolonged period of time. But it's difficult to gauge exactly where it's going to go in the next 12 months, given all of the uncertainty around the business model, around some of the fundamentals. So this one seems to be riding the wave of the broader equity market and the upside that we've been seeing since really Trump was elected. It's kind of hard to really gauge exactly what its fundamental value is, given all the uncertainty around it.
All right. Well, I agree with all the comments that have been made on Tesla. I'm showing a chart on a daily chart here on Tesla. And I think John mentioned that it just reversed a little bit off of some resistance, and it did. It went up to the previous high and it reversed off of that. And I would love to own a Tesla automobile. I think the Model X, the little crossover SUV, would be perfect for me. But I have no interest in owning their stock as a trader. I think I agree with Sam's comment that as a long-term investment, it could be interesting, but I'm not a buy and hold guy. I'm a trader. I want to catch impulsive moves and grab some profit. My typical trades are 4 to 6 weeks. And if I look here, I see some loss of momentum. I see a reversal off the high. We're still above the Ichimoku cloud, which is predicting some support right here just above 340. And we're probably going to reverse to these Fibonacci areas, which are a Fibonacci retracement down 308 to about 260. And that could be just a normal part of the cycle. Again, long-term buy and hold. They're probably, Elon Musk is a really smart guy, and their products are really exciting. But I wouldn't own the stock right now. I wouldn't be buying it, and I'd be looking for a short, but it's pretty early. So I don't really see a trade. If I were in it, if I were long Tesla right now, I would be looking to get out if it gets below this last little support area down here, because then about, what is that, 358? If it got down below that, I would bail on it. But that's my take on it. Well, that's good discussion on Tesla. Next up is T. I'm going to go ahead and bring that symbol up, and I'll start off here on T, AT&T, and you guys can be taking a look at it if you like, and then be ready. So AT&T, I teach I teach my trading method. I call it the Master Trader training, and one of the things we look for is specific patterns. The patterns I trade aren't the only ones in the market that work, but they work for me, and they're pretty predictable, pretty easy to spot. And T doesn't have it. This is what we call a really messy chart. There's really no predictability or pattern. There's not a big trend or reversal to the trend or a continuation. It's just all over the place. It isn't a macro downtrend for this year, right? With lower lows, lower highs, lower lows, lower highs so far. That's about all we can say about it. So I don't like AT&T as a trade. There's nothing there for me as a setup. What do you guys think?
Pass. I agree. Pass. Next.
Yeah, I would definitely agree. And I'm going to take a look at this chart. I don't know if you can see my screen here, but I follow the S&P 500 sectors pretty regularly. And I take a look at telecom over the past year. It's been an absolute mess. It's been absolutely destroyed over the past 12 months, even while the S&P has gained 12% year to date. So I have no interest in telecom whatsoever. And I know very little about AT&T's fundamentals, given the fact that I have no interest in trading AT&T.
Well, that was a pretty resounding no for everybody. Right. I asked David, hey, did you get any feedback from the attendees? And they said, hey, not just whether you like the trade or not, but what would you do if you were holding it? If I was long AT&T, right, I would just exit it. I would not hold it.
You just got a nice bounce. I mean, you got a nice little, if you were long, like you got a little bit of something to sort of make you not feel so bad about getting out. Like you didn't mark the lows on your exit now, that's for sure. Right? Like you're okay. Slap my hand. I learned my lesson. Next trade.
Right. For me, this thing could go either direction at any time, 50-50, and those are lousy odds. Don't like them. So I would just be out. That's what I would do. Next up, I hope that doesn't sound harsh. It's just, that's my view. Next up is the Qs. Yeah, the NASDAQ ETF. It's probably a little easier to deal with here, huh?
That's a good macro trade.
All right, want to lead off, John?
Yeah, I mean, I think this is when you talk about growth, global growth synchronizing. I mean, this is your play. This is a market that doesn't need a steeper yield curve like the S&P 500, which is obviously influenced by financials to some extent, at least more than the NASDAQ is. This is technology has been the great performer in 2017. And it's you look at the companies which make that up, and it's interesting, obviously, given the weakness in some of the FANG stocks in the last 4 to 6 weeks, how the NASDAQ has still managed to perform very well. So, I would say tomorrow, just like I spoke earlier, I think that the NASDAQ could be a little vulnerable if the Fed does, come out with a hawkish surprise. This is where there's some beta tucked in the market, and there's a lot of funds that are exposed, and they're not necessarily ready for a little bit of a hawkish surprise, and I think that you could get some selling tomorrow. However, if the Fed is either dovish or kind of, modestly dovish or in line, I think the NASDAQ probably is at new highs. The QQQ is at new highs in 7 days. So as long as we don't get a hawkish surprise, I think you want to own this because the trend is up, and truthfully, don't fight the trend in this case with the QQQs.
Yeah, absolutely. I'm definitely on board with that. I'm obviously want to watch the Fed tomorrow, but technology is usually the leader when it comes to stocks, at least in my short investment career. Usually it's, with this latest bull market, it's been tech and financials, and tech has offered a lot more upside recently. I think that the NASDAQ is on pace with the Dow over the past 12 months with gains over 23%. So there was a bit of a rollover in the tech sector a few months ago as we were wrapping up the quarter, but that seems to have been a short-term thing. Overall, as long as this equity rally continues higher and continues north, and as long as the Trump-inspired post-election rally continues, I think the NASDAQ's going to be the forefront of that. So I don't really see that leveling off anytime soon.
I hate this. I just hate this chart, right? Because I'm a swing trader, and by the time we have a mature trend, it's too late to get in the trade for me, right? I try to catch the inception of trends or big corrections or continuations. And this is a very long, mature trend, and I agree with everything the other two panelists that John and Sam said. It's in an uptrend. It's unbroken. If you're going to do anything, go long. But for me, it's too late. And I see a couple things. I drew a line up here at the top, horizontal line. And I can see some consolidation. We're struggling to put in new highs. I can see some momentum dropping off. But we've seen that before down here last fall, right? Here in the spring, we've seen periods of consolidation and the loss of momentum. And it took off to new highs. What I hate about mature trends is, I don't jump into mature trends. And then sometimes you come back 6 months later and say, oh, I sure should have, right? But you can also get in, and then they can end that day. So, I have a clear set of rules I have for looking for the beginning of a trend. For a trend, I would be interested in shorting the Qs if it showed a setup for a correction, but it's not showing that yet. The data is not here. The pattern's not here for a correction. So I hate it. I just hate it because there's nothing for me to do, and I'd hate to miss a big move if it's going to go up. But yeah, there's plenty of other trades for me. What do we got up next? Netflix, of course, Netflix. Bring that chart up. It was a pretty linear, predictable, orderly trend until it wasn't. A pullback, and this thing actually looks to me like it's setting up for a correction. It's not ready yet, but I sure would not be getting long on Netflix myself. I don't know. What do you guys think?
Here's my rub with all these stocks, and we just talked about the technology space, and we just spoke about the FANG stocks and how they've pulled back. They've had their struggles recently, or relative struggles recently. And my thing is this: is if we're in a regime, and this is more of a macro analysis. We're in a regime where there is a record amount of money moving from active to passive management. Incredible amounts of money come into risk parity funds. By risk parity means they weight their volatility in their position around what they perceive volatility going forward. So instead of like a classic 60-40 stocks bonds mix, they may have a 30-70 stocks bonds mix, so that the volatility of the portfolio is equally weighted out. Hence the word parity. Hence the phrase risk parity. So here's the thing: when we look at a stock like Netflix, okay, it's obviously a key component of the NASDAQ, et cetera. And that is, there's a lot of people that haven't caught this rally. And so as we just talked about how this chart is grinding higher, this is, at least for me, emblematic of the regime that we're in, where there's institutional money flow systematically and incrementally coming into the markets. And what you get is this grind higher. So Netflix is part of that, is part of that, those allocations take place there. So whether it's a Netflix, whether it's a QQQ, whether it's a Tesla, they're all benefactors of this regime of money moving into passive investments. Okay. And so I'm going to have a little bit of a bias higher on all of this. So, just like you just said, yes, it could go up, it could go down, but given, that a rising tide lifts all boats, and I think the Qs are going up, even albeit a mature trend, I think you got to look for Netflix to go higher as well, just simply based on the market correlation.
Yeah. I'll try to level down my bias in favor of Netflix, but I'm definitely bullish on Netflix over the long term. I've always believed in the business model, and I've been following it for some time now. Interesting, there was some research done about Google search trends for Netflix recently, and some researchers are looking at the correlation between actual metrics and the performance of the stock. And based on things like Google search trends and anticipated subscriber growth worldwide and domestically, I mean, there seems to be some strong indication that it will continue higher as we move along up until the foreseeable future. So I look at Netflix from a business standpoint. I've been following it for quite some time. As an over-the-top delivery model, everyone is trying to emulate it now. So I'm definitely in favor of Netflix. I'm bullish on Netflix long term. Of course, in the short term, I think that its performance is going to be dictated by the broader movement in the market. So I have no reason to think it's going to be going down so long as the NASDAQ and the broader stock market is pointing higher, as we've seen it this past year.
And that's an important qualifier. I saw the CEO, the founder of Netflix, being interviewed back when they first started the company. Remember, they used to just mail DVDs to people. I remember him saying, "I hope you didn't think I founded this company to be in the business of mailing DVDs." And boy, that was prescient, right? He had a vision. They are a great company, and over time, I'm sure they're going to increase shareholder value. I'd like both of you, I think, qualified it that if the NASDAQ continues up, they would go up with it. And yeah, probably so. Probably so.
Probably so.
Facebook. Speaking of the FANGs.
Speaking of the FANGs.
Facebook puts the F in FANGs, right?
And a lot of other things.
That's right. All right. Well, doesn't this look just, if you took the label off, you could think it's the Qs, right? Really?
Yeah. So, okay. I mean,
yeah, go ahead, John.
The Fed, again, we'll just circle back to the Fed. If the Fed comes out sort of in line, not overly hawkish, doesn't throw a bomb on the market tomorrow, you know, you're just going to see this trend continue. So, I mean, I think that's sort of the last coast is clear. I mean, outside of an outlier geopolitical North Korea mess, you know, if the Fed comes out, they sort of drop the dots like people tend to think they will, the market will do a little bit of shuffle and then continue about its way of people migrating capital into technology stocks at a very incremental pace. And Facebook will probably be up another 4 or 5% by year end, as long as there's no, you know, bombs thrown on the market, you know, and that's just kind of what it is for the next 100 days.
Yeah, I see $200 in I was pleasantly surprised by their ability to grow their revenue. I know there was some issues or some question marks around that on Wall Street a few years ago. You know, where are these guys going to get the revenue growth from? I think they've done a good job in the mobile department. They're growing their mobile ad revenues. It's, you know, really the only social media stock that's actually really done anything significant as far as I'm aware. You know, Twitter bombed and a few others there haven't done nearly as well. So I think that, again, it's in line with the broader NASDAQ, and insofar as that market is going higher, I think that Facebook will be dragged higher as well.
Yeah, you know, like I say, it looks almost exactly like the Qs chart, right? You'd have a hard time telling them apart with the label wasn't there. Mm-hmm. I think it's, you know, they have done an amazing job of growing revenue, and it's really funny that, you know, I got a 19-year-old son, and, you know, he and his friends want absolutely nothing to do with Facebook. So, you know, it used to be a young people thing and a cool thing. Now it's a thing for people that actually have money. That seems to make a difference, right? Let's go ahead and move on to the next one here. We're getting through here. And David, let us know if any comments or questions come in, or any on-the-fly picks there on YouTube. We'd be happy to take it. Look at Micron here. It was funny. I read a couple articles. I used to work for Intel. You know, I worked in the semiconductor industry. It was a great company. I had a great experience there, but left in 2010. And I saw a couple articles that said basically that Intel's CEO and board need to be fired for malfeasance, and why couldn't they do what Micron did? And Intel certainly, from a stock price perspective, has not come anywhere close. Look at this trend, man. This does not look like the Qs. This one is on fire. Any commentary from you guys?
Well, I like Goldman Sachs' recent report. Pretty much said, "Whoops, we're sorry, but we missed on today." So it looks, at least they were honest, right?
So here's something you can look at doing with a stock like Micron that's become a market leader, and people are going to be, you know, people have missed the boat on that. I mean, we can draw on these clues. It's not like it's necessarily over-owned and everyone's long it being, and they're all riding this thing higher necessarily. There are people who've missed the move. So you can get in like some option structures for maybe 25% of the position if you really like it here, understanding that it doesn't offer the best risk-reward ratio, but you're going to define your downside, okay? Because this is a stock in an uptrend. It is a stock you want to own, but damn, it's stretched, you know? And so you can put on, let's say if you're going to normally own 500 shares for your portfolio, you could put on like a 1-by-1 call option spread on it right now, like a vertical option spread, and put that on for the next 2 months. So you have a little bit of exposure, you know? If it pulls back, then you can use those classic fibs, use those moving average, use the Ichimoku cloud, and then define and buy your support. And this keeps it on your radar, because this entirely is starting to just keep melting higher. I mean, if you put a gun to my head and said, where's this going to be in a week from now, higher or lower, it's going to be higher, even as extended as it is on the charts. So I think you have a couple different strategies for, like, okay, this is a melt up, this is a paradigm shift. This company's clearly in the middle of a reprice in the market. At least that's what I see. If you want to own it, if you own it, hold it, and then have, you know, working bids. You can obviously tell back at that breakout range. At some point in time, if it pulls back there, there'll be a lot of people waiting to bid that. So stack your bids above that level.
All right. Let's see. Sam, you'd already talked? No, you haven't weighed in on Micron yet, have you?
Yeah, I have. I talked about Goldman Sachs' little gap.
Yeah.
Oh, that's right. That's right.
Yeah. Charles is watching his has a couple ideas for us. One is PCLN. What do you guys think of that one?
So
ECLM. I'm pulling it up. Is that
Priceline,
is that right? ECLM.
PCLN.
PCLM. I'm gonna. Oops.
Yeah, Priceline.
Oh, Priceline. Okay. Priceline.
And everyone else listening, if you have any other suggestions, go ahead and type them into the live chat window now.
I'll go ahead and weigh in here on Priceline. I got an opinion on this one.
Take it, brother.
And I actually see, just based on, I use a very simple, repeatable method approach to Elliott Wave. It's only really 3 trade setups, not the 144 permutations you have to memorize like somebody could in the standard approach. I got 3 trade setups, right? I look to catch an impulsive move, I look to catch a correction, and after a correction, I look to catch a continuation. And we expect a correction once there's proof of it starting to retrace into a Fibonacci retracement zone, 38.2 to 61.8. It's not magic, right? Priceline is showing clear evidence of a correction beginning, right? Big gap down that had some follow through with lower lows, lower highs, lower lows, lower highs. We got negative momentum. It's under the Ichimoku cloud. It's pulling up, but the cloud predicts with uncanny accuracy where it's going to hit resistance. And it looks like it's going to hit resistance and probably continue down into this retracement zone. So I like a short on Priceline right now. I don't like the price of Priceline. Buying options on this thing would probably cost you $5 grand a contract. I like to go deep in the money, high delta directional. Just I would buy a put, right? And you got to have a pretty big account. I like to have a handful of them so I can manage to trade and scale out. So you got to have a pretty big account to trade this thing the way I like to trade. But I do like a short setup on Priceline right now.
Do you think it's about going to go back up things on this, and they're all being look back above? Much about the stock, to be honest, but just interested in your take on it.
Yeah, it was breaking up for me just a little bit with your comments there, Sam. Don't know if it's my connection or yours. I hear John okay.
Yeah, it was breaking up a bit for me as well.
Yeah. What do you got any thoughts there on Priceline, John?
No, I was waiting for your lead on the price pattern there. Just looking at the chart, like you said, I probably feel like the next 5% up or down is probably gonna tell you where to go. You know what I mean? If we get a 5% gap up the other way, now you're looking at an island reversal on the downside. If we get that gap down, I think you got to kind of be all in and follow your your pattern there and move from there. So that's but again, like what's the if it breaks down, if the Nasdaq breaks lower, okay, and this has been a laggard, right? And this hasn't been as much as participatory in the last bounce, and for whatever reason Nasdaq breaks lower, this might be a place I'd look to get a little bit to start to pick on. This might be a stock I would pick on if the Nasdaq, if we get a hawkish surprise from the Fed tomorrow.
Yeah, fair enough. This could accelerate faster than maybe some of the others.
And maybe like a Facebook or a Micron, which is overowned, which is strong. Some of these weaker names can begin to struggle. Like so hey.
Yeah, Sam, you want to try again? It sounded like you had something good to say.
Can you guys hear me?
Yeah.
Yeah, you sound good. Go for it, Sam.
Yeah, no, I was actually gonna ask you, Dean, about what you thought about some of the valuations for Priceline. I'm looking at some analyst ratings and looking at where the market is headed. Do you think that it can climb back toward $2,000 before the year's end? I mean, there's some pretty lofty expectations about where it's going to go in the next 12 months.
Yeah, we were talking before the show. I got an MBA from the University of Washington, and I know how to do fundamental analysis. I did it for years, and I found it to be the most frustrating exercise of my life. Right, and what I've learned is, I believe in the efficient market. That every known bit of information, public information, is showing right up here in the price pattern. So I hope I don't sound too you know, caustic or whatever, but I don't really care what their PE ratio is. I don't really care what their earnings are, because the market's telling me what they think about this stock right now, and the technical pattern shows that it's starting to break down. And I like John's comment that, you know, if the NASDAQ, you know, if we got some surprise hawkish news from the Fed and the NASDAQ started down, ones like this, you know, in that sector, in that index, they're already starting down, could be the leaders going down with faster acceleration. So I'm a technical trader. I put all that fundamental stuff away. I think it matters. Fundamentals absolutely matters, right? But I believe in Benjamin Graham, who said, right, in the short term, the stock market is a voting machine, right? And it's based purely on what people think and how they interpret the information, and their actions show up right here in front of us on the chart. In the long term, you know, it's a weighing machine. We weigh earnings, and that's the value of the company. But in the short term, they're voting this one down. All right, what do we got? Any other on the fly, David, or we want to get back to the list?
Yeah, how about CF?
CF. Okay. You know what I love, all these, you know, these are kind of marquee stocks. Everybody's heard of these. I love nothing more than finding a stock that nobody's ever heard of, or that I haven't heard of.
I haven't heard of. Yeah. No, exactly.
Yeah, and you know, uncovering, you know, a diamond in the rough, and you go, wow, there's something that looks like it's got something special going on.
Yeah,
and CF,
the very first time right now. So.
Me too.
And CF actually looks like it's got something kind of special going on. This looks like many stocks that I'm looking at in the you know, energy services sector, pipeline exploration, whatever. This, I don't know if that's the sector they're in, but that's what it looks like. Mm-hmm. And this is trying to. It's been beaten down, obviously, came down from $70 down to 20. And it looks like it wants to retrace now. And it got really close to a Fibonacci retracement once. It failed. It's taken another shot at it. So the problem here is it could stall at that last high. If it breaks that high, it might get into this zone. There may not be enough profit. So I like the overall pattern, sort of. But I think there's better ones that are primed maybe to retrace. And we're going to talk here about what our favorite trades are in a minute. And I got one that looks sort of like this, but way better.
Yeah, it seemed to have run up there pretty much in line with the price of oil there in the early part of the year, as WTI clawed back up towards $50, $51. So maybe we saw some correlation there with that, as the energy bottom began to dissipate. So
yeah.
I wish I would have been asked this question about 2 days ago, you know, on that little, because you look at 2 days as it made that little nice little hook pattern, you know. It gave you a pretty risk-defined entry point there off that shallow pullback. But it is what it is now. We will again see tomorrow, you know, what this is industry stock, what's going to happen if the Fed is hawkish with a strong dollar, you know, and companies like this are maybe benefiting from this dollar. I mean, if I overlaid the dollar chart on this company chart, okay, if you go back to the beginning of September, the dollar's been just annihilated. You know what I mean? The last couple of months. And again, I'm sure that there's individual aspects that are helping this company, but a weaker dollar is definitely helping the crude market. It's definitely helping commodities. It's helped copper. And so I'm not surprised to see that, you know, a company with the name CF Industry Holdings, without knowing anything they do or any of their exposure, but just intuitively, when I see a weaker dollar out there, I'm not surprised to see this stock near 52-week highs.
Yeah. You know, when we've commented on oil a couple times obliquely, I'm going to pull up a daily futures chart on crude here. I think there's something interesting going on. Maybe we could each comment on this. So this is the daily continuous contract for crude oil futures. And what I'm looking at is, you know, for this whole year, you know, everybody knows over the last, you know, several years, oil got totally crushed from $200 a barrel down to, you know, what, 40, right? But this year, if we just look here at the price movement this year, right, lower low, lower high, lower low, lower high, lower low, lower high, right? It's a, you know, it's a volatile, big swinging downtrend, but it's a downtrend, right? And this last move did not put in a new low, right? This is a higher low rather than a lower low. And now it's heading back up, and it's hitting some real resistance just over 50, like 51 bucks ish. If it can break through that and get some solid closes above about 51, I think we've turned, right? We're above the Ichimoku cloud. We're starting to build a little positive momentum, right? Again, I'm a technical guy. You know, trying to figure out the fundamentals on oil is like, the most complicated clock on the planet, right? There's a lot of moving parts to the price of oil, but it looks to me like it's trying to start a rally. And if it gets a good solid close, a couple days above 51, that could be starting, in my opinion. You guys have thoughts on price of oil, where it's going?
Again, there's no need to make a call on oil until I see what the Fed does tomorrow, because if they do come out, I think that's going to set the framework for the next 4 to 6 weeks of a trade. Again, I'll say this: people are expecting the dots to come down. They're expecting a balance sheet normalization. Okay, but if the dots don't come down, all right, then we're looking at a situation where it's going to be perceived as a hawkish surprise. I think commodities can come under some pressure. The dollar can actually make a pretty strong move, and that can cause a little bit of a domino effect, which we're going to have to see how they all fall. I can't go over all the scenarios now, but for a lot of these, if the Fed gives the coast clear tomorrow, buy, set your stop, walk away. Really, it's one of those. This is a passive investment environment for sure.
Yeah, oil seemed to have struggled recently around the 7-week high mark. The fundamentals are all over the place. There's so many conflicting signals about where the market is headed. Obviously, the weekly rig count data that comes out every Friday is clearly showing a rise in U.S. activity, and that seems to be stopping any effort to drain the global supply glut. But there was a report recently showing that the demand for oil is going to rise significantly over the next 10 years or so. So that kind of brought bullish sentiment back in the market. But I think, those long-term forecasts on oil are really kind of pointless, because we've seen the market evolve so much in recent years with Tesla and with automobiles that are far more efficient. So, I take a look at oil and I see it. I don't see triple-digit oil anytime soon, anytime in the near future, anytime in the long-term future. I still see it as being around where we are right now, kind of sluggish, maybe looking for a turning point, but nothing over $60 a barrel anytime soon.
Interesting. This has to be the most frustrating chart in the world for the OPEC folks who, worked really hard to cut production and draw down reserves. And
then you get Libya production coming back online, and you get Nigeria coming back online, and you get Iraq coming back online. So it's you take some out from here and you put it in there, right? It's you drain it from one part and it pumps back from another area. So there's a lot of infighting going on in OPEC, it seems like.
Yeah. Why don't we go ahead and at this point in the show, go ahead and share our current favorite trade. I'll lead off with that. And my favorite chart right now, I gave a clue, right? It's in the oil energy resource sector, right? And this is actually CLR, Continental Resources. Again, I love companies that are obscure. And before I found this chart through a scan, I'd never heard of Continental Resources. They trade at really nice volume, very liquid. About 3 million shares today. What I like here is I only look for 3 setups in a very simple version of Elliott Wave. I look for a new trend, I look for a correction to a trend, or a continuation. Well, we got a continuation, right? We had a big, massive trend here. We had a really nice correction, picture perfect correction into this Fibonacci retracement zone, and now clear evidence of the continuation up into a Fibonacci extension area, right? We've broken through the cloud. We've got growing positive momentum. We've got higher highs, higher lows. This is I got about 5 criteria that I weight for entry, and this one's 100% on all of them. So we took an entry in my trading room today, 36.89. We've got a stop on this one down here at 32.01. This last support area, we got a target up at 56.22. So the reward to risk on this is about 3.5, 4 to 1. I love everything about this, and it's got a nice deep option market. So we're long. We're buying calls far out in time, deep in the money, high delta calls on this. We're gonna let this baby run. Looks good. What do you got, Sam? What do you like right now?
So I had a chart here coming up. I'll just go to stock charts, the easiest way for me to get it. But as you know, we deal primarily in volatility when it comes to tradinggods.net. And one of the things that I do talk to a lot of new traders who are just in volatility for the first time, and they always think that volatility has to go up or there has to be high volatility in the market to make money. And the XIV comes along and it shows you that's not really the case. So the XIV has been a phenomenal play really since the election. It essentially moves in the opposite direction of the VXX, so it goes in the opposite way of volatility. So when volatility is declining, the XIV is usually skyrocketing, and it moves in the same direction as the S&P 500, only 3 to 5 times the pace. So the XIV has been really on a tear since last November, and that's really been the go-to trade that I've been looking at for really all year long. So if you're bullish on stocks, XIV has been a really, really good play.
Okay. And John, I'll bet you're going to say, well, if the Fed does this.
Yeah, no, well, I mean, got to come with something. So I like silver actually on the long side. Can you pop in an SLV chart please for me? Because my desktop not able to get that. Thank you. I think it's silver has a lot of potential tomorrow. I'm actually leaning for more of a dovish outcome out of the Fed, and I think that's going to set up some nice trades for emerging markets. Also for silver, which could really just go absolutely bonkers. And so I think that from a risk-reward ratio right now, you can get in silver with a relatively small amount of risk. If the Fed comes hawkish, you're flushed. You're out. But if they come dovish on a risk-reward basis, you can actually get long silver. And I think silver goes and cracks these new highs, and you can risk 30 cents on that chart to make really $1. And that's a really solid, risk-reward ratio. So I like being long silver.
Excellent. I kind of like this chart too. I'm actually bullish on gold. I'll pull up
that'll benefit tomorrow as well. Make no mistake about it. They both should do it. I just think on a relative basis, silver outperforms, but both should. If the Fed comes dovish tomorrow, both are going to have huge, engulfing bullish engulfing candles upside. So I just think silver can give a little more punch given the state of the global economy, and gold is more of a risk-off position in that framework.
What I like here on gold is the way it tried to start a rally all year, and it hit this 1307 on the futures. 1307 was like a brick ceiling, and then just recently it smashed through it. It's pulled back to that level, but everything is pointing to a pretty significant rally starting in gold. I really like it. I do like I think there's a bigger gain potential on silver. And looking at that chart, I think you're right there. But I like these both a lot.
Yeah, looking at the gold-silver ratio, seeing how that's come down quite a bit over the past few years, actually over the past 2 years, leads me to believe that silver, there's more upside in silver, especially considering its role as a base commodity as well as partly as a haven as well, which is mostly reserved to gold. So definitely lots of good things in store for silver, I think, moving forward.
Very cool. Very cool. Let's go ahead and go back to the list. JP Morgan is the next symbol here. The banks. What about these banks, man?
Yeah.
There's Goldman Sachs, JP Morgan, Citibank, Bank of America, a couple others. Pretty much everybody but Wells Fargo, who got hammered for a good reason. Boy, they just look like they want to correct and then they never do. It's kind of frustrating, actually.
Well, if the Fed comes dovish tomorrow, they're going to get smashed. You got to basically throw the towel in on them at that point in time, on all the financials or nearly all the financials. They without a steeper yield curve, they're in trouble, and that's why they've just underperformed to the extent that they have.
That's interesting insight. And I don't know about throwing in the towel, man. I love going short.
I mean, in terms of if you're long financials and the Fed, slams the dots down tomorrow, there's no borrow short and lend long model. I mean, that's so much what the bank does. They earn that carry, And that's why, I mean, on a relative basis, as Sam talked about earlier, like why the XLF is struggling and why the technology is ripped. You know, that's, I mean, long technology, short financials. That's your spread trade. Knock out your beta exposure, and now you're just, you know, playing the relative value.
Yeah, I mean, on a somewhat related note, I mean, listening to, you know, Jamie Dimon bash Bitcoin didn't really give me any good fuzzy feeling about JP Morgan. And then a couple days later, JP Morgan buys Bitcoin ETNs. So go figure on that. I thought that was funny. But
Wow, I think we lost the audio on Sam. That's a bummer. And you were saying something really interesting too. Yeah, I think there's a connection problem.
there over the past.
Next symbol up here is Goldman Sachs. I think our comments are going to be the same on Goldman Sachs. You know, the whole financial sector, and that'll be really, really interesting to watch. So we'll see how that goes. Let's take a look. Hopefully Sam's connection gets back in there. So let's go look at Google. I think this is going to fall in line with the comments that we were making about the Qs and technology stocks in general. I see something a little bit different here in Google, though, in that it's under the Ichimoku cloud. It is beginning to correct. I actually see a decent short trade forming up here on Google right now. You could, you know, and of course we want to get through the Fed announcement tomorrow, but if it takes out this previous low, there's a high probability it's heading down between 879 and 800. I kind of like a short on Google. Again, I'm not taking any new trades till we get through the announcement tomorrow. It's obviously going to cause some movement in the market, and we'll see how that plays out.
And the key thing is, even though you're not a fundamental guy, you can still respect that certain events recalibrate the charts. You know what I mean? And that's an important distinction to make to people out there, that you're not oblivious to, oh, well, it's 1:59 p.m. on the East Coast, 1 minute before the Fed announcement. Let me put on this new trade here. You know what I mean? Because the market's already pricing. So that's an important distinction to make of how you are respectful of that. You know, but it's the technicals that determine your positions.
Absolutely, because we know there's information coming that's, you know, historically has been disruptive, right? It can cause trend changes, you know, big deals, and there really hasn't been big economic news for some time, really, right? So this is it tomorrow. Yeah, so you wouldn't, you know, just like an individual stock, if they were, you know, if I was trading a pharmaceutical and they're going to announce, you know, whether the FDA approved their drug tomorrow, I'm not taking a position today, right? You know, I don't know how that's going to turn out. I'm going to wait and then see how the technicals look. So yeah, I agree. It's an important distinction to make. It's not, you know, I'm a technical trader, but it's not blind. You know, we know that big events, when we know they're coming, have a big impact. So we prepare for that. Boy, Sam, we got audio back on you. Are you with us?
Can you guys hear me? I'm having some connection issues, like it looks like.
Yeah, we hear you, buddy.
Yeah.
Yeah.
When it comes to Google, I mean, I don't really have much to say about the price point right now, but it always amazes me just how vast the company really is. I mean, there was recently a study done that looks at Alphabet's travel business, you know, and that's going to be worth estimated $100 billion by itself. So if you're looking for growth, you know, if you're looking for develop a basket of high growth stocks, I mean, Alphabet could be one of them. I mean, there's just so much potential in that stock, and you think that they've done it all, including spy on you and take all your data. They have a lot more to go. So, yeah, just interesting to see how deep the pockets are at Alphabet Inc.
Yeah, it is. They're an amazing company, just like Amazon. So big and so intrusive is not the right word.
No, that is the right word.
Omnipresent.
Yeah.
They are
on the show yesterday, the Crowd Forecast News show yesterday. We talked about Alphabet's potential investment in Lyft, and whether that would be good for both companies. So you guys have any thoughts about that.
No.
Yeah, from a financial standpoint, I don't know. You know, I'm not a conspiracy guy. I don't get into that. But you know, Alphabet and Amazon, companies I both admire, but at some point you go, they're going to know everything about me, and it starts getting a little creepy. And it's an awful lot of power concentrated, right? You just wonder if that's going to draw some regulatory attention at some point. Just the degree of information they have about everybody and what they do with it.
Yeah.
Well, they both invested heavily in the driverless car concept, so it would be a natural alliance or investment opportunity.
Yeah, over the past few years, I think they've spent something like over $1 billion on the self-driving technology. And isn't that how much they're going to be going out for Lyft? I think it's around that mark. So it may be a natural fit as they expand into the travel and the mobility market.
Yeah. Well, I think we're running out of steam here on these trades. I think we've done a good job at covering a good number of trades. And of course, what we always came back to was, hey, at 2 p.m. Eastern tomorrow, there's some big news coming out. And why don't we go ahead and wrap it up? Why don't each of us, we'll start Sam, then John. Just any closing comments you have here for the attendees. Any final bits of wisdom, things to watch out for, and any closing thoughts?
We've seen the equity rally continue higher and higher throughout the year, but we've also been seeing a ebb and flow back in volatility. Volatility has shot up on a number of occasions throughout the year, including a 9-month high earlier in the summer. So I would caution investors just to keep track of volatility and what vol is saying. Right now, vol is very, very low, but we have seen some mean reversion at play over the past few months, and I expect that to continue moving forward. I mean, if you look at some of the research, it shows how overvalued the market really is, the second most overvalued in history behind the dot-com crash. You can buy into that or not, but looking at movements in vol recently, I am starting to see some anxiety, some jitters back in the market. So keep track of that.
Good comment. I agree with that, absolutely. John, any closing thoughts?
Yeah, I think that surge in volatility, it happens when you get movements in the interest rate market. And if you look at what's happened to global interest rates in the last 8 days, it's been a total slaughter, i.e. rising yields and big sell-off in the TLT, big sell-off in fixed income. And it's the move in interest rates that can help facilitate a rise in volatility. And that's taking the global macro perspective on things, understanding rate differentials between countries, currency movements, capital flows between countries, and which countries have better growth prospects, hence are attracting those capital flows. So interest rate differentials are a big factor in that, and tomorrow's Fed decision is going to give us some great light as to what the Fed's going to do. The Bank of Canada came out a week and a half ago and did what was a relative surprise rate hike. The Bank of England came out with some very bullish comments as well, very hawkish comments last week, which helped the British pound put on a big move like it did, and saw the UK yield curve sell off. So now it's the Fed's turn. Okay. Is the Fed going to be the trifecta right now in terms of hawkish commentary from major G8 central banks? And if it is, that pickup in volatility that Sam was alluding to has a great chance to continue if they drop a hawkish bomb on the market tomorrow. I don't think they will. I think they're going to come dovish, and I think that it causes another melt up in equities. And we do actually get a little bit of a retracement in this big global sell down that we've had in terms of the interest rate market. So, but nonetheless, though, all of that presents opportunity if you're a volatility trader like Sam just talked about, and that's my thing to pay attention to for today.
Okay, well, thanks. And my take, I'm a technical trader. I look at what's actually going on in the reality of the market. I think it plays out right in front of our eyes. I think tomorrow there will be a reaction, one way or the other. I don't know which way, but I'll be having a live trading room during the announcement, and we'll be looking at trade setups and seeing if we catch any. I've got a very specific trade the news setup for intraday short-term trades. So any of the attendees. We'll be doing a follow-up with a recording and stuff. We'll have a link if you'd like to join in that live trading room tomorrow. It'll open up at 1:30 p.m. Eastern Time, 10:30 Pacific Time, and we'll get to watch how the market responds, right? And then we'll get to parse over, what did Janet mean when she said that? And what does it mean that she combed her hair that way, and all that good fun stuff, right? Like everybody does. Well, hey, it was good to be on here with you, Sam and John. I enjoyed the discussion, and as I expected, we got some really good different perspectives on the market and these individual trades. So thanks for being here. Hope to have you back and do it again in the near future.
Thanks so much, everyone. Appreciate it.
Always a pleasure, guys.
Guys, appreciate it.
Yeah, thanks. Thanks, guys. Great show. Just want to remind everyone watching, be sure to hit the YouTube subscribe button to get updates on future shows. Also, you can join us next week for both shows. On Monday, for the Crowd Forecast News show, John and Dean will be back. Also, Bennett McDowell and Anka Metcalf will be on. And just want to thank all my guests again for this week. Neil Batho of Trader Review was supposed to be here, but had some technical issues, so hopefully he'll be back again soon. John Netto of the ProteanTrader.com, Sam Borgi of TradingGods.net, and Dean Jenkins of FollowMeTrades.com. Thanks, everyone.
All right, thanks.
Thanks, guys. Good night. See ya.